After a very volatile week, equities are going to end the week off the lows, trying to crawl back to that midpoint of the month, right around 26.55 in the E-minis. If we can get back there, at least we know kind of where a defined bottom is, something we haven't known, I think, up till this point. Right now, the equities are trading fully off the passing of the stimulus that went through Congress today. This overnight low, we saw trading lower. We creeped and crawled all the way back up until the stimulus was passed. Now we continue that push higher. This is definitely a stimulus-induced rally. And at this point, it's unclear as to how high we can take, how much risk investors are willing to take at this point, given what we've seen over the last 2 weeks. This market remains very choppy, and you will see another move to the downside, and you will see higher levels than we're at right now. But of course, it's how quickly and how fluidly we can trade and get things back, get our sea legs back under us, as it would be. But right now, stocks remain a little more positive than they were, say, earlier in the month, but certainly not looking at this as being a bull run just yet. There's still a lot of uncertainty out there, and a lot of things need to be cleared up as to, first and foremost, the depth and the time frame of which any economic shutdown that we're experiencing will continue. So we still have some darker days ahead of us, but it looks like in the short term, heading into the weekend, equities are going to go out on a positive note. What does that mean for volatility? Well, the VIX index hasn't traded, down around below 20 in almost a month, for good reason, obviously. But at this point, the VIX index north of 60 suggests that there are still going to be some major price swings in the underlying indices. And why not? Because we're sort of waiting for those headlines to come across, all clear or continued, or we're looking at coronavirus death rates versus cases. And the equity markets tend to ebb and flow with all that information. One thing that's been kind of left out in the dark here is maybe some of that economic data. We did see some economic data today. The Michigan sentiment numbers, the expected or forward guidance looked a little bit weak at this point, but that's to be expected. I think obviously we need to get some clarity, and we need to get people, working again, getting out of their homes, and that might give a more of a positive sentiment. But now that we have a government stimulus passed, not yet in play, we've got the Fed doing their thing, out and ready to do whatever is necessary. And then we have the jobs number next Friday. That could be very interesting to see how the jobs number is portrayed, because obviously a lot has changed in the last month, specifically over in the last, basically in the last 2 weeks. So that jobs number may be overlooked if it's very, very weak, as was claims. They were overlooked with 3 million plus jobless claims filed. The market rallied, and that suggests that we'll probably overlook a lot of the sour data, at least in the short term. But in the longer term, it's going to be a different story here. And I think that as long as, again, if we can continue to see slow and steady moves higher, get rid of the sharp knee-jerk reactions lower that we saw, matched by knee-jerk reactions higher, and maybe that volatility number will come down, maybe that VIX index will come down. But as long as the VIX index remains high, I think the uncertainty remains high, and that is going to cause for a difficult trade, a difficult way to build momentum in either direction. Down trades bring fear, up trades bring a little bit of relax, but obviously we're not seeing sustained trade in either direction. I think to end the week on a high note ahead of the weekend, when typically risk is coming off the table, suggests that maybe we do have a little bit of breathing room to the upside. But it's all going to come down to how this plays out, how the government plays out the doling out of money and stimulus, how the Fed plays, and can they keep the same, calmer heads prevail sort of attitude? And I think if that happens, we may see some downticks in equities, certainly, but I think that the big cratering, plummeting declines may be behind us. At this point, the key level is going to be 26.55 in the minis. That will get us back to a 50% retracement of the month range, and certainly would bring a bit of a calm, a sigh of relief, as you will. We can see a sustained trend at that level, and heading into the weekend, we are just below it. So look out. Next week, we'll have more of the same with the headline risk, but look out, that jobs number on Friday. It'll be very interesting to see how the market interprets it.